All right, meantime, PSU banks have been on a tear with the index 25% higher this year, while the overall Nifty Bank Index is up just 10%. So what's really driving this rally and will it sustain? Let's find out from Gaurav, who joins in with the trends. Gaurav?
Well, yes, when we talk about Nifty PSU Bank, we have already seen some kind of outperformance. The index has grown almost by 25% in this year itself. It is actually has outpaced Nifty banks as well as Nifty. And when we talk about the numbers and when we talk about fundamentals, there are some factors which are actually supporting PSU banks. So first, let's go back and see what happened in second quarter of FY25 when we saw the loan book growth for private sector banks was actually slower than the PSU banks. PSU banks actually grew at a rate of around 13%, which actually helped them gain the market share. In fact, when we talk about this trend, this wasn't the trend for PSU banks. They used to lose market share in terms of credit growth to private sector banks. But in this September quarter, we saw them gaining market share. Other than that, another reason why PSU banks are favored is the LDR ratio. Now we know that regulators were concerned about the LDR ratio, rising LDR ratios in the private sector banks. But on the other hand, when we talk about public sector banks, they always had a low LDR ratio, which gives them room for growth in terms of credit. So that is another reason why we saw some kind of growth coming up from public sector banks. And from here on, there are some other triggers which can help public sector banks even to sustain this momentum. So first we have is the October data. When we look at this data, even though the system credit growth has slowed down, when we talk about some of the WALR, which is weighted average lending rate for public sector banks, we have seen some kind of uptick coming up here. And at the same time, when we talk about weighted average term deposit rate, which is a deposit rate for public sector banks, that has gone down. So that can actually incrementally give spreads of around 25 basis points, which can help net interest margins as well as profitability for public sector banks in near term. And on the other hand, when we talk about MPC meet outcome, we are already expecting some kind of changes in CRR or SLR ratio from RBI that can actually help public sector banks in the likes of around PNB, SBI and Bank of Baroda. When we talk about valuation, now valuations are a little stretched if we compare it with 5 years average. But again, the fundamental factors which are supporting public sector banks seems to have some kind of support, and it can actually support the banks even further. Talking about the overall index, it is still not at a 52-week high level. It is still below 11% from its 52-week high level. So there is still scope for further growth. So definitely watching out on public sector banks. But on a fundamental level, it seems that they are getting some kind of support and they are also improving if we compare it with private sector banks.
If you like this video, then like, share and subscribe to ET Now.